How do you feel about this 50-year mortgage proposal?
I feel like most people are just getting up in arms about it a little bit. For me, it seems like it could solve a problem, right? So for me on the mortgage side, it always goes back to what is the goal, right? Because when something new, if we were to all of a sudden release a 7-year ARM, for example, in 7 years your interest rate's going to be, people would be like, wait a minute, what? That sounds wild, right? So the 50-year mortgage, I can see both perspectives, why people are against it, why some are for, but home affordability is a real issue. You know, a lot of the conversations I have with home buyers that are coming to me, they're doing anything they can to lower their monthly payment as they're starting a family, as they're first buying a home. So I do think from that standpoint, depending on the goal of the borrower, a 50-year mortgage could provide the ability for someone to get into a home at a lower, more affordable monthly cost.
Yeah, I mean, did you see Glenda Baker's post? We just played it, but did you
No,
see
I
that
haven't
at all?
seen it,
Okay, all
no.
right, you're gonna see it. So on Instagram, Glenda Baker, who is a influencer, she always introduces herself as a realtor from Atlanta, Georgia. People see her as a thought leader, I think. And she kind of went on a rant. I had agents at my company also feeling very much like this is a scam. That's what they're saying. It's a scam. But then I went into the office to do training for my agents, and a broker at the firm also came into the office. And two of the three people that, besides me, that were in that place started their real estate ownership career with a 40-year loan. A 40-year loan.
Right.
And I'm like, yep, you guys got 40-year loans because that's what allowed you to get into the house, and they both refinanced within 1 year. So I'm like, this is the short-sightedness of these online hyper politicized
Mm-hmm.
responses to this idea. Though, like you, I also understand if you kept any loan for 30 years, 50 years,
What
it
are we
looks
talking about?
ridiculous on paper.
Right.
Nobody does that.
Of course.
Nobody does that.
Nobody does it. And that's a lot of how like nobody wants to have a 7% interest rate for 30 years anyways, right? The goal is always the market will improve, things are cyclical, you'll refinance. On average, most people stay in their loan for 3 to 5 years. So if anything, it's just a short-term solution. I mean,
Exactly.
think about how many people want interest-only loans. I talk to people all the time. They will do anything for the
Absolute
absolute
lowest
lowest
monthly
monthly
payment.
payment.
Exactly.
And
And
it
so
doesn't matter.
here's what I thought. And I said, if I had a client who was looking at this type of loan, I would say, look at a 30-year amortization schedule, see how much principal would actually have been paid down each year, and make a principal payment to match that so that you have a bit of increased equity. If your concern is, because this is part of what the online
Right.
chaos is, and again, I have a love-hate affair with social media. It's very hard to get your point across, but even when you try to, people don't really read it before they have some kind of gut reaction to it. Like on this very thread where I was like, wait, let's slow down a second. Let's think about this. If you're making principal payments on a 30-year schedule and you're just, you're able to get the house, do you want 100% interest rate as in being a renter for the rest of your life? Or do you want to take advantage of this buyer's market that we still have right now? Get in, refinance when your position is better, when the rates come down into a conventional loan, but at least you get the house. Exactly to your point, the objective.
If
And they called me names. This one lady was like, that's the most ignorant thing I've ever heard. This is such bull. I was like, whoa, I'm certainly one of the benefactors of such type of creative financing. If you want to talk predatory lending, let's look at FHA loans. My first house I ever got, 3% FHA. I had trash credit, like 540, like horrible credit. And they still gave me a loan, 3%, and I had to pay mortgage insurance. So I'm like, is that not predatory? Like having a 97% of my property mortgage? Of course. I
When it comes to
personally, yeah.
numbers in the housing market, there is no shortcut secret. All risk is baked in some way, shape, or form. So it does come down, again, to the consumer being educated on what they're stepping into. Nobody is pushing anybody into a 50-year loan, throwing it at them and say, the people that are pushing back and being like, that's ridiculous, you're basically renting, then don't do it.
Right, exactly.
Who said you need to take a
Nobody's gonna.
50-year
I'm glad
mortgage
we agree on
anyway?
this. So, would you put one of your clients into a 50-year loan?
If that was the goal and you're telling me that they had there's a solution for them to get into an appreciating asset that they could refinance out of in a year to 3 to 5 years? Absolutely. Why not? That's the thing about housing. That's why people invest in the housing market, is because you're investing in appreciating asset. This allows people another option to get them into the house.
Yep. I honestly, I don't see it as much different than a 50-year ARM of sorts. You know, it's kind of like, at least you know the payment's not going to go up, which was the problem in the 2008 situation, is that these ARMs were adjusting, going crazy from a low interest rate to a high interest rate. People couldn't afford it. That's not this scenario. This scenario gives you the lowest monthly payments. It's still going to be amortized over some amount of time. Nobody's going to keep it for that long, but at least it gets you in. You can pay your principal down as long as there's no prepayment penalty, and it's kind of like like an ARM with no adjustment.
Absolutely. And again, for me, it always goes back to, what is the goal, right? Like, what is your long-term financial goal in general? And I think that is such an overlooked question that a lot of people don't even talk about. Even, can I afford this house? It's like, okay, well, you can qualify for it, but what is your other spending? What is your family planning looking like? There's so many factors that are involved in this that I just think, and again, if you were to look at the 50 years, you're paying a considerable amount more of interest. But again, make principal payments, meet with someone. You know, when you're buying a house, you need to have some form of support in a team behind you that's going to help, at least with the finances, with the home buying decision. So that's just another facet of it, is like, let's make a payment plan where you're paying down principal, right? There's no prepayment penalties on these type of loans anyways. So, I mean, also, there's a lot of higher end clientele that I deal with that they're only interested in interest only loans, right? On these large loan sizes, on these $1 million mansions. And it's because they want the flexibility of, yes, they can have a lower payment, but they know that they're going to make principal payments anyway. So why not just have a lower?
That's the hack. It's like, almost for a lender like you, maybe you have to add something into your plan where if your client ends up taking on this type of loan, you're like, all right, how about this? In 3 years or 2 years or every year, we're going to have a call. I know you're the master of follow-up, right? So I don't need to tell you this, but like, you take on a little bit more of a guidance kind of thing here, saying like, hey, interest rates are here. Maybe now's a good time to refinance.
We're always incentivized to, get our clients a better monthly payment and look at stuff. So my goal always when I'm working with people is not to just sell them a loan and be a salesman and goodbye. I want to do people's loans for their entire life, do their family, right? And so that comes with also being an advisor. It's not what everybody is trying to do. But at least for me, yes, there is that extra level of care and looking out for your, your client and consumer. And also, one thing that I'm not really seeing them talk about, a 40-year mortgage compared to even a 30-year has a higher interest rate for a reason. So that the risk factor again is baked in. You're paying a little bit higher of an interest rate. Of course, your monthly payment is down, but again, it's not like you're blindly just going into this and that is baked in.
It's baked in because you're borrowing the money for a longer period of time.
Why would an investor want to lend out this money
for 50 years?
At the same rate, right? So,
well, I'm going to move on one second. I like I'm picking up what you're laying down. So you and I talked a few weeks ago about Zillow because you had a phone call. The mask is off. Okay, this is the guy I was talking about when I said a lender had explained to me that someone he had talked to said, well, we're incentivized, right? I mean, I don't want to tell the story. You tell the story. And an
not
agent
one
said
agent, not one. Multiple, many agents. I could pull up text message documentation saying, hey, I would love to work with you. I'm still waiting to have a lead that isn't through Zillow, but to be honest, I have to. Was the verbiage. I have to, because they incentivize. And really it was from a friend that recently moved over to a Zillow Flex team, and she's like, dude, I just got to send them to Zillow Lender because they give us better quality leads that way. So listen to this. So Real Estate News on
November 8th published an article, Zillow accused of using kickbacks to boost mortgage business. So buyers, this is what the lawsuit alleges. Buyers who clicked contact agent or similar buttons on Zillow's platform were routed not to the listing agent, but to a Zillow affiliated buyer's agent in the Flex program or Premier Agent program. We know that racket. Everybody knows that racket. Okay, those agents allegedly had quotas or incentives tied to sending leads and pre-approvals to Zillow's own lending arm, Zillow Home Loans. Okay, so for example, access to higher quality leads was conditioned on sending a certain number of clients to Zillow Home Loans. The complaint contends that these arrangements violate RESPA and state consumer protection laws And it claims that this steering meant the buyers didn't get their free choice of lender, which is state law, as my understanding. Not an attorney, but that's my understanding. It further alleges that the cost of these referral lead generation and commission structure inflates overall home buying costs, higher purchase price, higher commissions to the detriment of buyers. I call a little wah-wah on that. I don't think that that stands. But if these incentives aren't disclosed to the buyer, which I believe in this case, the person who with whom this story started actually said she had no idea that her agent was either incentivized or made to pay some kind of a fee as a result of using the Flex program, but then ultimately got like a kickback if she ended up going with Zillow Home Loans. That disclosure is the part I think that would violate RESPA.
Yeah.
So you're seeing it in the real world. What do you think is going to come out of this?
I think a lot of awareness, number one. I think maybe it'll help agents not feel cornered, number two. And at least on the lending side, it should, create more. I mean, at the end of the day, let's back up. Whether they receive technical disclosures or not, it's not good business. It's just simply not good business to have the same platform be incentivized to go through their lending portal when being on the lending side, there is so much nuance, there is so much communication, there is so much uncertainty when you're talking about a purchase that is this expensive that I almost feel bad for the agents that are not able to work with a lender that they trust to work with their client, because imagine getting a lead and then you have to dish it off to somebody else. You're losing so much control over the transaction. Again, it's just not a good customer experience.
It's not good. It's not good for the buyers to not have choice. It assaults the free market. All with this intention for Zillow to have everything on this one platform. I can't, we're all kind of trying to figure out what the end game is here. Our time is running out, which I hate because I feel like we could talk for an hour. But final thoughts, do you think it's suspicious that Fannie Mae is removing the 620 minimum credit score?
Suspicious? I mean, I don't know. I don't know if I think it's suspicious. I think, again, it comes back to everything is going to be, I don't look at it that way. I just look at, okay, so here's another thing that I'm going to get asked about. What is my take on it? How do I explain it? My take is the risk, again, will still be baked into the cost of the rates and everything. So sure, maybe you can get a DU approval for a lower credit score, but they still have to, be eligible. There's still debt to income ratios, and those rates are going to cost more. Everything is, you have a lower credit score, your rate's going to be higher.
Right.
Like nothing is free. Everything is, there's only so many levers we can pull. So if we're pulling this one, well, everything balances out. So suspicious, I haven't thought that much about it. I guess I could see, well, how about this? Why do you feel it's suspicious?
I don't know if it's suspicious. Okay. I'm asking if it's suspicious. I thought the timing was suspicious because it comes out at the same time as this 50-year loan. I'm like, nobody wants a repeat of 2008, right? We don't want that. We want good qualified buyers to have housing affordability. That's the end goal, right? And, however we get there, it works for me. If credit score, the way credit scores, and this is a whole other episode, but credit scores are kind of under attack anyway. There have been other changes to credit score thing. Right, they took away the 3, system, now they're making it just 1, and the whole thing. So, it's just going to be interesting to see how this all plays out. We're at the baby beginning of it, but I feel like where there's a will, there's a way. Not everybody has rich parents. And just like me, the FHA loan was a way for me to get in. So I would say as long as you have good guidance and you use your brain about this, this could be an opportunity. And it doesn't need to be loaded politically. That's what I really think.
I think if you take a step back, you look at what are all these moves leading towards, and it's the same thing. It's trying to make people buy houses. It's trying to make it more affordable. It's trying to wake up this frozen housing market where there's so many buyers stuck and there's so many sellers. I don't know if you saw that just announced the portable mortgage thing that Trump has been talking about, where there are a lot.
No. Oh my God.
This is just like new as of like yesterday or today. I saw one thing about it, so I'm not saying I've done my full due diligence, but I believe there talks about having portable mortgages, which would allow people to essentially take their mortgages onto another onto somewhere else. Right. Whoa. So that is a huge push.
We're going to save that for next time. 100%. That's very interesting.
Again, another move to get people into homes.
Get them back in.
Yeah, absolutely.
I love it. Thank you so much for joining me. And especially in person. It's such a pleasure to have somebody in the studio. Yay. And will you come back maybe monthly
Please.
updates?
Absolutely.
Let's do it.
I could talk forever on this stuff, so let's go.
All right. Thank you so much, Matthew.
Of course.
If you like this episode and you want to see more, click here for a playlist and here for the full episode.